Thank you for joining me. I'm Alex, and I would like to have a look at Hewlett-Packard, or rather, the company that is not named Hewlett-Packard anymore. It's just HP Inc. now. So they do printers, computers, and devices, and they do not do big servers anymore because they sold that business, or rather, they made it their own business, which is HPE. Hewlett-Packard is HPQ now because they acquired Compaq at some point. They acquired many companies. So current price is $19.57, which gives them a market cap of $28 billion. The dividend yield is 3.7% with a payout ratio of 23%, which seems amazing. Revenue $58 billion, earnings $5.3 billion, and a PE of 7. And actually, it's slightly under 7. That's trailing 12 months, but still pretty amazing. Total assets $35 billion. Total liabilities also $35 billion, which gives them a total stockholders' equity of $639 million, which is down from a negative $3.4 billion. So certainly going in the right direction, but certainly not looking great. And why are we talking about this? Today, news broke that Xerox, which I'm surprised is still around, wants to buy Hewlett-Packard, or HP, sorry, HP. And obviously, that made the stock price for HP go up. Interestingly enough, it also made the stock price for Xerox go up. So certainly doesn't seem like a terrible deal. And to sum up why they want to buy it, it seems like this is pretty amazing. So PE of 7, obviously amazing. Dividend yield 3.7% with a 23% payout ratio, with also amazing. Balance sheet does not look great, I have to be honest there, but it's also not terrible. Like, you can live with a negative balance for a while as long as you can pay your bills. And with the negative balance dropping by 80%, obviously things are going in the right direction. So obviously the balance sheet cannot be completely disregarded, but certainly not looking as terrible as the same numbers would be for a company that's just slightly breaking even. Earnings of $5.3 billion is obviously a lot. So to sum that all up, if you're a growth investor, probably not invest in HPQ. But for a value investor, if you can look past the balance sheet, I think that it's actually a pretty good buy right now, especially for a PE of 7 and a dividend yield of 3.7%. Even if the deal with Xerox does not work out, it's still a decent buy. So you want to buy companies with a PE of under 20, and 7 is pretty far away from that. So obviously that is going well. Dividend is not bad. Balance sheet, they can live for a while without going bankrupt, especially if they continue to have these kind of earnings. So I would say that if you're not a growth investor, I would say this is a pretty strong buy at this point, especially with the rumors about Xerox buying them. So if you're a value investor, probably look into that. And if you're a dividend investor, also look into that, because regardless of whether or not Xerox ends up buying them, I think at this current price, I think it's a good buy. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.